morning. Hi, this is Bill Hayes with Kenilworth Asset Management. And today I'm going to talk about something a little bit different about how to use an investment vehicle for not just planning for now, but planning for unfortunate events like your death, or also for planning for future generations. And what I'm talking about is insurance and how you use insurance within a wrapper of your overall planning scheme. Now, this will be insurance, we'll call it part one. And what we're going to do is just go over the general idea of different insurances that are out there currently that you can use and how you can best effectively use them. Now, insurance is something that you obviously should talk to your advisor about and see how it fits into your portfolio and how to use it for not just wealth management, but for wealth protection and catastrophic protection. So insurance, really, there's two types of insurance you can use that. There's insurance that has a cash buildup, and then there's pure insurance. The pure insurance, you've heard names like term insurance, which is something that, it just has a term, and that term goes to a certain period of time, and all you're doing is paying for insurance. That's just protection of your life. So if an unfortunate event happens, that your loved ones are protected. A lot of times you see term insurance being used because it's just pure insurance to be used to get the kids through college, just in case something happens between now and then, or to make sure that your survivors are protected for however period of time you want. Term insurance historically only goes up to about age 85, 90. So it does have a finite cap on it. The other is what's put under the umbrella of whole life. And whole life has a whole different series of different types of insurance you can use in there. But what it boils down to is that the cash that you put into the policy, also cash is set aside and it builds up in value. So, and how that cash that's set aside builds up in value is a myriad of different ways, where it can be invested in money market funds or mutual funds. Those are called variable universal life products. It can be invested in treasury bonds, where they just have a fixed amount, like a whole life does. But understand that whole life in its totality is there's a cash buildup. Now, the benefit of whole life versus a term is that whole life allows you to build up, and if you don't have money for that at the time you need to make a payment, the cash value can also pay for that insurance if you miss a payment. The beauty thing about term insurance is it's very cheap. You can get $1 million worth of insurance for a third of the price or a tenth of a price. I'm just throwing out numbers, but when you see the differentials on how much cheaper term insurance is to whole life. But here again, whole life is being used to not just protect your life, but also to build up assets. So what you've got is when you look at whole life, you want to look at it, do I want to put money away and do I want to invest it? Now, here's the thing about insurance. All insurance policies, payment of all insurance policies are treated tax-free. So that's a beautiful thing. If you put money in and unfortunately you die, but your kids get that money, or your wife or whoever your beneficiary is gets that money tax-free. It's very, very effective way to make sure you save yourself. In the meantime, if you put money into an insurance policy, the money you pull out, that money is treated, the first money you pull out is treated as return to principal. So that's kind of like a return to so that's also tax-free. But that's utilizing insurance on the cash value side. Now, what we're going to do is next time we talk, we're going to talk about drill down on the more specific products and how you can use insurance and how you can use it with your portfolio to develop a nest egg that not only protects you for now and grows, but protects you for generations to come once you've established these insurance policies. So if you have further questions, as always talk to your accountant and your financial advisor. For more information though, please feel free to give me a call, Bill Hayes, at Kenilworth Asset Management. The number, 847-920-0400. Thanks, and have a great day.